So, as a realtor, you most likely learned about us from one of your already existing lender relationships. And they mentioned us as a new product that can make you more competitive in working with your clients and can save your clients money and create a lot of convenience for them. So the first experience you're likely to have is at the kitchen table conversation with your client, where you would say, this is a great new product that I have available. It's available through this lender who I work with and would normally recommend to you anyway. Let me walk you through how this might change the experience for you. First of all, you're not going to have to change your process at all. It's really as if your consumer, the borrower, can actually just go out and get a loan immediately on the next house. So you can keep your process the way that you run it today. The one thing you might want to do a little bit differently to leverage the additional time as much as possible is you might start looking at that next home a little earlier in the process, knowing that you're going to have the ability to bring this non-contingent offer to bear. In terms of your negotiation strategy and your negotiation approach, the main thing to know is that you have the opportunity to potentially ask for better pricing on that next house because you can bring a non-contingent offer. In terms of the timing, that's probably the one thing that's different, is you need to be thinking about the fact that you have this window that for a little while gives you more negotiating clout during the sales process because you effectively already have an offer in place. If someone comes in with a lowball offer that's below the purchase price guarantee or is really close to the purchase price guarantee, you can negotiate more aggressively to try to get them up because you've already got an offer in place. However, you also need to be conscious of the time involved in that, right? If someone brings a 92% offer and we have a 90% purchase price guarantee in place, and there's 90 days left on that clock, you might be pretty aggressive in negotiating to try to bring that price back up. If there's only 2 weeks left and it's a 92% offer versus a 90% offer, you might be more inclined to take that 92%. And as you price the home, that's the other thing to be thinking about, is if you're going through and updating pricing to try to get offers in through the process, you need to manage those to help the home sell within a specific time frame. Otherwise, we don't really affect your process much at all. Three key points of contact. You'll probably hear from all three, and so it may feel redundant, but it's important to make sure that you know. You'll likely be notified by your client right out of the gate that this is the way they're going to work. Second, you'll see it flagged just as you would throughout a traditional lending process when your consumer comes in and says, hey, I've been pre-approved. Third, your client should provide us with contact information for you that will allow us to notify you and provide you with some information about the timelines. So because we change your process so little, I'd say one of the most important pieces of support that we provide is just that there's that purchase price guarantee. It's just the very fact that there's an offer that's in place that you know is in place. You know what the timelines are from the beginning. You know that the consumer has the ability to make a non-contingent offer on the next house. We don't change your process very much, and as a result, we don't provide a lot of process support because it's your process. If you're not able to help your clients sell their home on time, then we are obligated to buy it and they are obligated to sell it. So as a result, you know that the home's sold and that the home will sell, which is better than the normal process. You at least know that it got taken care of. But you also know that it's not going to sell for the price that it appraised for. We do not get involved with or interfere in the relationship between the realtor and the client in terms of commissions, beyond if we are asked, recommending to the client that they pay you some amount of a commission. Many realtors are willing to offer the client a reduced commission rate if they sell to us instead of on the market, because that sends the consumer, the client, a message that the realtor is aligned with them and wanting to have that sold. But again, that's entirely between you and your client, and we don't interfere in that process at all. That's a pretty big topic because the realtor experience is a little bit different for all of them versus us. I would say with us, there's very little impact on your process. In the case of Opendoor, you're not even involved, right? That's just lost business that just went out the door and you don't get to be involved in that process. In the case of Orchard effectively only empowers their realtors. So for you to be able to offer through Orchard, you have to join Orchard. You have to be an Orchard realtor. In the case of Fly Homes, you can work with them as a realtor, but you're going to need to become certified and work through their process. And so it really does depend upon who you're talking about as far as our competition. I think versus any of them, we change your process the least, we save your client the most money, and we provide your client with the most opportunity to work with lenders that you've worked with in the past. Easiest way to do it is the same way that you would normally introduce a lender into the process. So whatever part of your process you'd say, by the way, here are 2 or 3 lenders that I'd recommend you contact to get a quote. All you do is say, here are 2 or 3 lenders I'd recommend you call to get a quote. And by the way, this one has a cool new product called the trade-in mortgage that would give us some neat opportunities if we wanted to be able to let you move into your next house first or negotiate more aggressively. We are fully compliant, and while typical RESPA compliance requirements to avoid steering and so forth still exist, there's absolutely nothing that prevents you from being able to say, here are 2 or 3 clients that may offer mortgages, and you should get a rate quote from each of them. And by the way, this one has a different product. And that's a big part of what's differentiating for our lender partners, is that you don't have to worry about that complexity because you're not steering them in exchange for a marketing agreement. You're introducing them to someone who has a unique product that can allow them additional flexibility. The clients that are an ideal fit are clients that already have equity built up in their home, which usually means they need to have been there for a couple of years. They are looking to move into a new home, typically in the same market area. In some instances, as long as we work with lenders in both markets, an entering and a departing market, we can still facilitate that process. But because the process does overlap, the lender at least needs to be willing to make the loan in the new market on the new home, and we need to be operating in the market where there's a departing home. Otherwise, the main thing that needs to happen is the consumer needs to have equity in their house and want to be able to use it. So if they're within a market and they're buying and selling in the same market, virtually any of your clients who have equity in the current house and want to be able to buy a new house will benefit from the product. The key people that it's not for, people who don't already have a house, or people who are moving into a market where the lender that you're working with that offers the trade-in mortgage does not make loans.